Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Voytek, James, welcome back. The experts in US properties, specifically in Detroit. I can't wait to hear all about what is new and exciting, but welcome back to the show.
Thank you so much for having us. Really always enjoy being here.
Yeah, likewise, Sarah. Pleasure.
Awesome. So before the podcast, we were just talking about some exciting updates about Detroit. But for those that may not be familiar with Michigan, or what you do and how you've helped investor, maybe just give us like a quick overview of what it is that you're doing currently to help investors make more money.
Yeah, of course. I'll take that one. Hello, everybody. It's a pleasure to be back. And for those who don't know me, my name is James. I'm the Vice President of Sales here at USProperties.ca. Look, quickly, we are a Canadian-based boutique investment company, really specializing in helping predominantly Canadian investors. We do deal sometimes with Americans or foreign nationals, but the vast majority of people are Canadian. What we offer is a turnkey solution for investing in cash flow positive real estate in the Detroit, Michigan area. I think one of the keynotes to know about us, what really sort of defines us from my perspective, is our end-to-end turnkey system. So everything that a potential investor who's listening today would need, from the correct U.S. entity formation for taxation and liability concerns, through property selection, construction, property management, lending, insurance. We have either in-house or at our fingertips. And as I speak to potential investors on a weekly basis, I think there are a lot of people who potentially have been interested for a while in dipping their toe in the U.S. market, but may have found it a little daunting as to where would I go? Who's going to help me? Who's going to help me get set up? And I think the fact that we're Canadian at our core, but yet have this extensive infrastructure, experience, reputation, and boots on the ground in Detroit, it really strikes a chord. And I think we offer a really amazing full package to help people get entered the U.S. market correctly.
Yeah, absolutely. So Voytek, why Detroit? I mean, you've been doing this for a while and you've bought many properties in Michigan, and you guys absolutely love Michigan, but why Detroit?
Well, I'll tell you, I mean, we love the story. We love what's been going on there, for the last 7 or 8 years that we've been there. It's a city that, went down the toilet, literally, it has been going for a number of years until 2013. And, there was a bankruptcy that happened. They got billions of dollars from the federal government in order to rebuild the infrastructure. And what it created is really an amazing playing ground for entrepreneurs and real estate investors that want to come in and be part of something really exciting and a rebuild of a major American iconic city. Detroit used to be, on the same, plane as New York or Chicago or Boston, one of these major cities, and because of it was so reliant on certain type of automotive industry and a few other things that kind of happened along the way, it went into a decline over a number of years, and now it's in a major rebuilding phase. And all the exciting things that are happening with automobiles and this massive shift from combustible engines to electric, and Detroit's at the forefront of it. It has this massive infrastructure where all the factories that have been producing regular gas emitting vehicles are now being shifted and turned into electric plants, and so many of the U.S. cities and states have mandates now to really change, the way we sell vehicles and operate vehicles, right? So, California, for example, by 2045, they're going to eliminate 90% of cars. They're going to go 90% electric, right? And so there's this massive demand where like tens of millions of cars have to be produced, manufactured in a very short period of time in order to meet that demand so we can have a positive impact on the environment and on the rest of the the country. So and all that's happening in Detroit, combined with massive real estate gains, like really literally going from homes that were being sold for $5,000, $2,000 10 years ago, to now average home price being closer to $200,000 in downtown metro Detroit areas, still well below the national average. So
that's interesting. I don't know if you know these stats, but I was always curious that, I mean, obviously, you're in the business of buying and rehabbing homes for Canadian investors to then rent out. Is Detroit, like, what's the percentage of renters versus homeowners? Have you ever looked at that? Just curious.
We have.
Yeah, so so again, it goes by neighborhood, right? But most neighborhoods where we buy, it's about 50-50. It's very close to those numbers. So
Okay.
50% owners, 50% renters.
And are they, like you mentioned, automotive industry, like, are they mostly in that blue collar, world of working at one of the plants, the car dealerships, the car manufacturing? Like, is that mostly what their work is? For the ones that work, obviously, I know you guys do a lot of Section 8 as well, but the ones that are employed.
Yeah, so there's a huge range of industries that have really developed, like, from the tech sector to the banking to financials to insurance. It's really all encompassing. It's a major US city. So you have, 6 million people in greater Detroit, right, that are employed. So, obviously certain industries will be more prevalent in the suburbs, such as, maybe logistics or or things that tend to kind of be drawn to those areas. As you get closer to downtown, you have everything. I mean, tech is massive. Google has 3 offices now in the Detroit area. Amazon is there. There's every single social media platform has an office there. So it's really become a very inexpensive way to to set up an office, because the rent per square foot is so low on the commercial side that these companies can move in there and operate at a lower cost and still have all the benefits of being in a bigger city and have access to labor and to talent. So it's really incredible what they've done and the rebuild that has occurred in the last few years. I often speak to people about kind of they have a stigma of Detroit, right? And they have this past interpretation or view that it's this crime-ridden, scary city. Oh, don't go there, right? And that certainly was the case. You go 15 years back from now, there was downtown stores were boarded up. There was no restaurants. There was no nightlife. There was no hotels. Very few. And right now, there's 20 new boutique hotels that open. There's a very lively food scene, restaurant scene. I actually think the food is better than it is in Toronto. There's like a little bit less variety, but everything that's there is really, really high quality. Like they really, really try and appease and try and get more clients. And it's a really amazing success story.
Very cool. It sounds like it's revitalized and continuing to revitalize. You mentioned that there's some numbers and some stats, right, recently that came out, I think, before, that you were wanting to share. That was the Detroit market. Can you share a little bit of that insight?
Yeah, absolutely. Yeah, we're super excited because we often watch different markets in the US and kind of see what's going on in the other cities, like in the major cities like LA and New York and Boston, and what's going on in Florida and in Texas. And they've always been at the top of the charts, right? Miami has been, for the last 2 years, has been #1 in terms of property appreciation, right? Usually cities like LA and Boston and New York, of course, have also been towards the top of the list, and then a bunch of stuff in Texas and Florida. For the first time in 2024, Detroit topped them all, right? And topped Miami for the #1 spot. Despite the that everything that's going on with the interest rates, of course, we've seen here in Ontario, there's been decrease in prices, decrease in demand. It's a bit of a struggling market at the moment, right? Detroit's did more than 9% appreciation in 2023 alone, and now it's poised for 10.9% in 2024. So there's a lot of momentum. There's a lot of positive things that are happening in the marketplace, and the interest rates are anticipated to ease most major banks and private banks and, in Bloomberg and all these like major financial authorities are predicting that by May of 2024, there's about an 80% chance during that Fed meeting that the rates will be decreased, right? So, and it's not guaranteed, of course, but 80% is a pretty good number. And we're anticipating, although it will be gradual, that there's a lot of excitement, a lot of anticipation, a lot of people looking to, jump back into the market because of these decreasing rates and the ability to take advantage of what's going on with the economic cycle.
Yeah, no, absolutely. So that's interesting. So, I mean, obviously you're talking about the double-digit growth and next coming year with that market. So just to get an idea, because I mean, obviously as Canadians, our price points are quite different than, I would say, even compared to many states in the US, and every state is so different.
Yes.
Well, first and foremost, is this a blue state or is this a red state? Michigan?
So it's a swing state.
Okay.
It's currently blue. But at previous election it was red, and it's the one that if it goes a certain way, it has a high level of determination.
Interesting. Okay, but it's landlord friendly. I know we've had that discussion in the past.
It is.
It is.
Very.
It is. Yeah. I find a majority, well, not majority, a lot of the US states are very landlord friendly. There's a couple. California,
unless you're like in New York, California, like some blue states. That's why I was asking if it's blue or red, but I guess if it's a swing state, there's
California's tough. California, I've heard Ontario type stories in California.
Yeah. Oh yeah, same.
Multiple
like
years.
squatters rights and everything like that. But okay,
Yes.
so just to get an idea, because obviously our price points in Ontario are, many places in Ontario are still at a price point where it might be crazy in the US to think about something that's worth $500,000. But what is the price point let's just say the average of the last 10 properties that you both bought for investors? Like, what was the average range of what that looks like, just to get us, an idea of what we're looking at?
Well, we still sell a cross section of assets that make sense in today's market for ourselves and for our investors. I think the sort of entry level properties around 100,000 US for a smaller 3-bedroom bungalow. They make a lot of sense. They've got great cash on cash returns. They're low maintenance, and they make a lot of sense. Like I said, in today's market with today's rates, right up through more expensive properties around 100, 150 to our sort of premium property, which is around 250,000. So that's the sort of spectrum of the range of pricing that we sell. I think that's a pretty good overview there.
Yeah. Okay. So 100 on the low end as an example, that's US dollars. And the acquisition, is there financing for Canadians that are looking at buying, something in Detroit, or are they buying it all cash to start?
Absolutely. When we first started, it was more difficult to get financing out of the gate for our investors. We did a lot of come in, buy cash, get stabilized, and then the lenders would be happy to work with the investor because they had an asset, right? So they could just do a cash out refi within sort of 90 days to 6 months. I think what's opened up in the last 2 years, especially through a lot of hard work by Voytek and finding a lending partner, is that financing has become more accessible to our Canadian investors, like right out of the gate. So more and more investors are coming in and purchasing these homes through financing.
Okay. And what is that loan to value? What are the rates, the terms, if you're able to share?
Yeah, absolutely. On a purchase acquisition, it's 70% LTV. So you need to put down 30%. We have a very good, quite a substantial US lending partner that is very excellent. They're professional, and they are offering the rates today are about 7.8 to 8%.
Okay.
Yeah.
And that is a private lending partner, or is that like one of the major banks in the US?
It's private lending. We have found, like, just for our national investors, private lending to be the best solution, particularly in the Detroit market. That being said, they're a major US private lender. They really do have lower fees and rates than most of the competition. We found through our experience with dealing with multiple lenders that some of them may call themselves lenders, but in reality, we're into FitTech or we're slightly underfunded. So there's a lot more dialogue, and it was more of an arduous process going through the financing. Whereas our current situation is very streamlined, very professional. Clients come in, they connect with us. Once they're on board, we find them a property. We can then introduce them to the lending partner. There's an initial meeting. I supply some sort of data, basic data on the property to give the lender an overview of what they're going to be looking at. What they're really looking at is to make sure the property is cash flow positive with the mortgage, that the debt service ratio is good, and that they're set up correctly through our U.S. attorney with the proper U.S. entity formation, EIN, U.S. bank account. We help with that whole process. But once that's done and it's sort of passed over to the lender, it's quite a streamlined process. It goes to a loan officer down to the loan processor. It's just a basic document submission, the scans of passports, the entity documents, we get an appraisal. And then of course the liquidity is deposited into the US bank account and the deal's fund. Sort of start to finish, 30 days. It's been great. Our clients are super happy with it from both the purchasing and from a refinancing state. And we couldn't be more happy with the lending situation.
Okay, so your business model essentially is you buy something that needs work, and correct me if I'm wrong, you buy something that needs work, your team rehabs, you help them through the refinance, and then you help with the property management to place the tenant, correct?
Exactly right. That's exactly right.
And how do you make your money as a business?
So we have, essentially we run the construction, like sort of arm of the business, or I run that arm. So when we do construction, we'll do a slight markup on,
Yep.
on the stuff that we build, right? Our normal, business model is, we make about 10% on each property. So it's not a huge amount of money.
Right.
We do go for volume. We do our absolute best to give our clients equity and the potential for equity capture. That's been working amazingly well in the last 6 to 12 months. I mean, we've had so many clients that had, we had sold a property to a client for $220,000. That was a more premium property, but that's what he was looking for, and it appraised for, I think it was $280,000. So, and that was like literally, just a month later, right? So that was already that value was already built in. Simply because we take the value of the property, we add the construction, and then we'll add our profit to it. Now, everything else that's beyond that, sometimes the client will get 5,000, sometimes they'll get 50,000. It all depends on how good our buying was and, and what we're able to achieve with that property. So we've really been, we've had so many clients get that equity capture, and that really enables them to scale and to burr and then go again, because we're really in the business of helping people build portfolios and and acquire a larger amount of properties and really manage them for them, so they can build something on the side, a really great asset on the side that when they decide to exit, there'll be a whole bunch of equity for them, at the end of the day. That's really the business model.
Yeah, I mean, you're not going to get rich off of one Detroit property, but I guess it's the scaling method. What's the percentage of clients that are repeat clients that buy more than one property with you?
It's been a long, very few people come in and say, you know what, I'm going to buy one property and call it a day, right? Almost everyone is scaling, either from an initial cash investment, which we were talking about earlier, and then doing a cash out refi into multiple more properties, or they're just coming in and they're financing multiple properties and then refinancing when they can. So I gotta say it's almost all the clients are scaling, and I spend a lot of my time helping people with that. That's kind of what I do. I'm here to help people through the turnkey system, whether it's initially getting set up and everything in between, to make it as easy as possible to get them from introduction through cash flow. And then I often come back on board, when they're saying, what, they've seen it work. Things have stabilized. It's been 3 months, 6 months, a year, and they're happy and they want to get more of them. So we come in and we have a meeting. We see what we could do, what's going on with the property, what's going on with the terms and the mortgage, and then we reintroduce them to the lender, and we scale. So it's really important to know these are highly scalable properties, and it's all got to do with the neighborhood selection. Producing this high lift that we're continuing to get. I think it really sort of ties in with what Voytek was talking about with the national appreciation in Detroit, but we're just seeing it, and we have a lot of happy investors. The appraisals are coming in weekly, and all of them are high compared to what the investor paid for the property, or they're about to pay for a property, and that's really got to a lot to do with Voytek's construction, which has really managed to improve. We bought it a lot more in-house. He's been able to get better pricing because of that, shorten up the timelines, and really sort of produce a better product, I think, for the investor. So yeah, we're continuing to get that lift, and a lot of people, almost all people, are scaling, sir.
Now, as they're scaling, are they building credit, US credit history that they're going to be able to utilize, whether they want to go to Texas down the road or do something different? Like, are you helping them build that as well along the way?
So, they are building credit and credibility and experience with the lenders. So yes, absolutely. They're not per se, in order to get actual US credit, you do need to get a social security number, and it's some paperwork that's involved. It is possible. It takes 6 to 12 months for them to get a social security number if they wanted to go that route. But most of them choose not to, and most of them will just, US lenders really look at experience of the investor above almost everything. Like, they'll look, of course, the appraisal of the property will be at the top of the list, and but it's a very close second or third. And so if you're able to show that you've had a mortgage for 6 months or 12 months in the US, and you've had a successful property and you're making your mortgage payments, they will lend you unlimited capital to buy more, as long as you choose to take that path. And what's great is the lenders that we deal with are national. So if you wanted to start in Detroit, but like you said, go to Florida, go to California, or wherever else you want to buy, you can do that. And you can use a relationship with that lender to purchase additional assets anywhere in the country, including Hawaii.
Yeah, that's definitely very interesting. I mean, as you're saying this, I'm thinking blue state, maybe not so much landlord friendly, but there's opportunity everywhere, I'm sure. So they're coming in. It's taking about 30 days for the transaction from start to finish. Essentially, when you're like, okay, let's, if they call you and they say we want to do something with you, 30 days to set things up until they close on a property is the rough time frame.
That's right.
Absolutely.
That's right. Yeah. As long as the renovations are finished. I mean, certain properties are at different phases. Some we may have just finished renovations, some are finishing in 2 weeks. So, from the moment we say, okay, go ahead and appraise, it's usually 30 days or less, in shorter periods of time, as long as the buyer is willing to submit the documents.
Okay. And what are the upfront? Sorry, go ahead.
No, I was just going to say, it's really 30 days from introduction to lender. And what that means is that the client has just signed the purchase contract, right, which is the intent to purchase. And of course, like Voytek said, the property is ready. Because the first thing the lender will do once they've accepted the file and met with the client is order an appraisal. They like to get that appraisal order right away. And then from there, 30 days later, we can all work together, get the entity documents, go through the necessary submissions to the lending processor, and we can close.
So you have properties ready then essentially at all times, or are you then bringing the investor first and then looking for a property for them after?
Well, we usually carry 5 to 10, and we'll have that many available. So if someone wants to buy a portfolio of 10 properties today, we can make that available. If a client is looking for a very specific type of property and we don't have it in the portfolio, well, then we'll source it, renovate it, and turn it over. That would take it just a little bit longer, but there's always stuff they can buy immediately and take ownership within 30 days.
Okay. And what are the upfront costs? Like, I mean, I'm guessing there's legal costs, there's setting up your LLC, corporation stuff. Like, what are the costs that are associated with acquiring?
It's affordable, I can tell you that. So as a client approaches us, and I've had the conversations with them, and it's evident they want to move forward. Even before that, I commonly introduce them to our Michigan tax attorney, because they often have questions like how does this going to work from a taxation perspective, being Canadian? They want to ensure that. But once they make that decision and they've solidified they want to move forward, they start that process with our attorney. It's about $1,400 US, right, to get the structure, which is the formation of the two needed US entities. with the articles and the operating agreements, and also the EIN number, which is the registration number with the IRS for both businesses. Once we get that, we can do a bunch of stuff. Most importantly, we can introduce them to the lender. And secondly, I can get you a US-based business bank account under the same entity. So now it's really starting to come together, right? You're going to be purchasing a house under an entity. You're going to have a bank account under the same entity. And this is really the sort of correct formation that the lenders are going to want to see to lend you money as a foreign national. All right. Besides that, and that's a really affordable pricing, by the way, guys. I mean, that structure was sort of found through Voytek and Pamela's hard work in the beginning of our company through a cross-border tax specialist here in Toronto. And the same sort of formations in Canada would be 3 or 4 times the price. So he's got a very special rate for our potential investors to get correctly set up. That's really it, to be honest with you, for the initial start. Of course, once you sort of hone in and find a property, we would work together to get you feeling comfortable and sign a purchase contract, and there would be a sort of 3% of purchase price deposit placed on the property. Mm-hmm. And then we're sort of off to the races. And then we start the process with the lender. There would be an appraisal fee, but nothing out of line with what people would expect. And then, of course, we work through the process, and the next step would be to deposit the down payment and liquidity requirement into the U.S. business bank account.
Okay. All right. So it sounds like you've got a team also in place that helps facilitate that entire process. You were talking about an attorney, and who's on your team? Like, who do you have that if somebody is brand new, maybe this is their first investment, they haven't done anything in the US, like who are some of the people that you have on your team to help facilitate the process, other than obviously, all the support that you provide as well?
So we have the attorney, obviously, that will help with the entity formation. He's also a tax attorney, so he can help with the taxes. There are bookkeepers that are available to process, to input any transactions. Then of course we have the property management team, which manages absolutely everything from A to Z. They have access to a huge amount of contractors, maintenance people, property inspectors. We also employ a number of trades and people that are, just readily accessible should anything happen to the property, anything at all, anything that's needed, so and then we're here, in Canada, right, to help answer any questions. I mean, James is so knowledgeable, and he has people that work with him and assistants and people that can help take people through transactions or help them with insurance needs. Absolutely anything that's related to the property that will arise, that comes up, we're here to help. And we can address any issues or answer any questions you may have.
So on a scale from like super passive to very active, passive is like you're a money lender, active is you're, managing the active project from start to finish. This sounds like it's a little bit more passive in the sense that, yes, you're not partnering necessarily with them. You're not the JV in that sense, but you're doing a lot of the legwork, right? So you're helping with the acquisition, you're doing the management, the contracting, everything, so that like they can be as passive as possible, because you're even providing the property management. So on that scale, it's maybe not as passive as being a money lender, but it's not far. I mean, correct me if I'm wrong. It doesn't sound like it's too far from that.
That's right. That's right. We really try to alleviate any issues that might arise, and really try and, our goal is really to give investors the possibility of being passive while having all the benefits of having actually purchased the property and have the different revenue streams that are available to you by actual ownership of the hard assets. I feel that, investing your money with someone and being like, oh, hey, you're going to get your 8% return. Well, that's great, but that will always only be 8%. By working with us, an investor can get the 8 or 10% cash flow, but in addition to that, they can get all the appreciation of owning the asset and the ability to refinance it, buy it, sell it, whatever they want to do with the property at any given point. It's 100% theirs. They have full control over it. They don't have to deal with, partners not paying disagreements, all that stuff, right? They're completely in control, but they have this massive support from us where we take them through step by step. So eliminate any of the guesswork, heavy research, time commitments, And, and should things arise, and, it's property stuff is going to come up, you might have a little maintenance issue. You might want to, the tenant might be late paying, etc. We have tools to remedy all the potential situations that may arise at their disposal. So again, they don't have to deal with it directly, but they get really all the benefits of actually owning the property. So, yeah.
Well, and building some US credit, I guess, along the way.
Absolutely. And the possibility of expanding into other states, and they want to go to Florida. We've done some deals down there as well, and and we will go back into the Florida market a little bit heavier once the interest rates go down a little bit. So that's a possibility. And we've had some clients that decided to do some short-term rentals, and we've been able to facilitate the acquisition of those particular assets for them as well. So we really have all the different types of properties covered, and we're here to help and really have everyone have as much success as possible within the market.
Okay. All right. Awesome. Any final comments before we wrap up? James, let's start with you.
I'm just often asked, if you exactly that, if I had to give some final comments or advice to people, it would just be, if you're thinking about entering the US market, but you're just being hesitant, this is a great opportunity and we're here to help. Okay. So just please reach out, and, I will personally help along with Voytek and the team every step of the way to get you set up correctly and on the way to a successful, US investment. And I know as things progress, you'll always know that, you started correctly, you're set up correctly. And you can join a portfolio of other Canadian investors who've done the same and are happy, and properties are going up in value, and they're all scaling. And that's what we love to do here.
Okay, awesome. Voytek, what about you?
Yeah, I kind of wanted to address maybe some of your younger listeners that are, maybe struggling in the, in the Ontario marketplace and trying to buy a home. I have siblings that are, finished university, did amazingly well. They have well-paying jobs and are having a very difficult time trying to buy anything in Toronto because the prices are so out of control, and the mortgages they're going to take on, especially with these high rates, are astronomical, and so they're scared, and they're kind of stuck, and these are people in their early 30s, late 20s, even up to 40s, who just can't afford to buy anything. And I wanted to invite your listeners to kind of think outside the box, and and sometimes it makes sense to own real estate in a certain market, but it really makes sense to rent in another. And, and with small down payments, you can really, help yourself generate passive cash flow in one market, which can be used to pay your rent in another, and essentially be living, rent free, which is, something a lot of people don't think about. And we feel that, in markets where you can pick up properties for $100,000, there's a lot of room to grow, and the potential of that property turning into a $200,000-$300,000 property, 10, 15 years down the road is quite high. Whereas, in markets that are at the top end of their prices, such as Toronto, you got a $3-4 million home. By the time that gets to $12 million, well, that could be 25 or 30 years down the road. The doubling is shorter in these more expensive assets.
Yeah.
And whenever there are, things that occur, such as interest rates or COVID, that just have all these different things that can occur, they really slow down the growth and the development of that. So just think outside the box. And, and if you're thinking about starting real estate investing, it's often very smart to start small and start with smaller investments. I mean, you can get into a Detroit market with $30,000 or $40,000, right? That's impossible to do that in most other markets. 99% of the markets in North America, you just can't do that, right? Here, there's an opportunity to do that, and and that's how my wife and I started 7 years ago, and we could never imagine how many properties you can buy in a short period of time, and how much success you can have just by starting with a small investment and having vision and thinking about real estate investing long term, and really not worrying about small little fluctuations and things that occur. Just have long-term vision, and you're going to have massive long-term success.
Great insights. Love that. Voytek, James, thank you so much. Where can my listeners reach out to you, find out more, potentially inquire about your market and doing some projects with you?
Well, they can look up our website, USProperties.ca. We got some great information there about what we're selling and what's going on in Detroit. And they can reach out directly to us through a submission on there. We pick up all of them and reply to all of them. And it'd be our pleasure to do that. So, check us out. You can also email me directly at James Lloyd, LLOYD, at USProperties.ca. I will respond promptly and we can set up a call and just start the initial discussion.
Amazing, guys. Thank you so much for being on the show, and congrats on your success. And every time we talk, you're scaling and you're helping more and more investors. So thanks for all you do, and congrats.
Thank you so much.
Sarah.
Pleasure seeing you as usual.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?